Hey everyone, it's Jordan with Citywide Mortgage Services. I just wanted to take this opportunity to do a video response to an article that I just read. I normally do not come out guns a-blazing, but when I read this article regarding reverse mortgages, I felt that I needed to clarify a few things. So the article, as you can see, is labeled Top 5 Alternatives to a Reverse Mortgage. In the second paragraph, it says that you need to be very careful about reverse mortgage lenders because they can be unscrupulous, which is a huge risk. So choose importantly. Here in Canada, we have one major lender that does reverse mortgages. They do 99.99% of reverse mortgages here in Canada. They are a federally chartered bank, so they are regulated by OSFI, and as you may or may not know, Canada has some of the tightest regulations in the world, which is evidenced by the fact that we were able to come through the recession back in 2008 with our banks intact. So no, here in Canada we do not have unscrupulous reverse mortgage lenders. The first option that it suggests as an alternative is to refinance your existing mortgage. Now, typically, those who are doing reverse mortgages are senior citizens. And while a refinance is a good option, now that we have the stress test, it can be very difficult for those living on a fixed pension or income to qualify for a refinance. Not to mention, you are paying a monthly payment on a refinanced mortgage, which is not the case with a reverse mortgage. Number 3, take out a home equity line of credit. Often done, not a bad idea. Again, there are at minimum interest-only payments for those. Now, you've got to look at the overall financial picture. The payments that you have to pay on a home equity line of credit are from after-tax dollars. Number 4, it says sell your home. Okay, that's not a bad idea, but you are losing out on the equity, the continuing growing equity in your home. The article also mentions that, hey, if you do these alternatives, you'll still have equity. Guess what? 90% of, I believe it's 90%, I will qualify this, of those who have a reverse mortgage and then sell their home have a minimum of 50% equity remaining in their home. It is not true that a reverse mortgage eats up all your equity. That is just not the case. And finally, it says sell your home to your children. Again, not a bad idea, but here where we live, where I live, asking your child to take on an extra mortgage. Let's take a look at Vancouver, for example. The typical detached home, which many senior citizens or older people are living in, let's say it's $1 million. It would be a secondary home for your children, which would require a minimum down payment of $200,000. Now your children have to come up with $200,000 in addition to having to qualify not only for their own mortgage, but another $800,000 mortgage. We know right now with the stress test and the tight federal guidelines, it's hard to even qualify for one mortgage. So this is not the easiest option. I think that reverse mortgages are a very good choice in certain circumstances, and I just wanted to put my voice forward after reading this article that I think you need to be very careful when reading this information. And if you have any questions, I am a certified reverse mortgage specialist. It's important to look at the overall financial pictures. If you have any questions, please let me know. Thanks for taking the time to watch this. Have a great day.